Thank you and good morning everyone and Happy New Year. Probably not the smoothest start to 2022 that we're all hoping for, but hopefully we're sort of on our way to a more kind of sustained recovery. My name is Binda. I'm from Wyndham Council and have the pleasure of facilitating this session today. I'll start by acknowledging the traditional owners of the land on which we're all present today and acknowledging that we are all in different locations. I grew up in Yorta country and live and work on Bunurong land. And on behalf of FinPro and all our members and guests, I'd like to pay respect to all our elders, past, present and emerging. So in terms of the session today, I guess, as finance professionals, we drive strong focus on strategy, planning, budgeting, and as we've all really towards the end of last year been working on our 10-year plans, a lot of the focus has been on financial sustainability, not just the one for 10 years, but really in terms of councils as a perpetual going concern. And as most of us have discovered, the demand on services and infrastructure outweighs sort of our core revenue streams from rates, fees and charges. So it's about what are sort of the other avenues of funding, and the conversation always comes back to borrowings, external borrowings, and the discussions certainly with the government agencies have also been around, is the sector undergeared? What are the opportunities for us to borrow? And I think we all welcomed the announcement last year around the opportunity to kind of leverage Treasury Court Victoria as sort of the borrowing authority. So I know some councils have already started engaging on different aspects, but there was also strong interest in hearing more. And I know from a Treasury Court perspective that you're also very keen to engage with the sector, which is terrific. So thank you for that. So today we've got sort of a panel of Treasury Court Victoria reps. So we've got Justin Lofting. Justin, maybe if you could just raise your hand, thank you. General Manager Treasury, and also Tanya Ventura from Treasury Court Vic, who will sort of present and provide an overview on Treasury Court, their interactions with other of the state and government agencies, products, pricing, that hopefully will give us a really solid overview. And we also have the opportunity to hear from two of our members. So we've got Nathan and Chen, who need no introduction other than to say, I guess, from both of their councils, so from Bendigo and City of Yarra, you're on different journeys in terms of progressing the discussions, and I think it's well worth our while to sort of hear about your experiences. So we'll do that, and there'll be opportunity for questions at the end, but feel free, please, to use the chat function. Gab will assist me in sort of keeping track of the questions that are coming through. And also, depending on how we go for time, we might then, if anyone sort of wants to more directly ask questions rather than the chat, we may be able to accommodate that. So without further ado, I will hand over to Justin and Tanya. Justin, I think you're kicking off, so over to you. Thank you.
Okay. Thank you, Binda, for the introduction. First, I'd like to thank FinPro for organising the webinar. We look forward to developing a strong relationship and an ongoing relationship with the sector. And I'd also like to acknowledge LGV and DTF, who have developed the framework. For those of you that probably don't know, TCV has for many years sought to lend directly to local government. And we're very excited about the opportunity to finally do that, and then to develop a long-lasting and productive relationships with the sector as a whole. Today, I'll spend some time outlining the background to the framework and the role of LGV, DTF and TCV. My colleague Tanya Ventura we'll then spend some time outlining the TCV loan products and the loan pricing under the framework. And as Binda mentioned, we will leave enough time for questions. I don't imagine that we'll be able to answer all your questions today, but I do encourage you to get in touch with TCV Client Services team, and then we can answer any specific questions you have. So I'll just share my screen to get the presentation. Hopefully everyone can see that. So I thought I'd first sort of provide an overview of TCV. So we were established back in 1993, and we are the state centralised financing authority. Our main role is to centralise all the management of the state's debt portfolio and the fundraising activity as a result of that, of their borrowings, and then also to manage the state's access to liquidity. Our clients include government agencies and departments, and now, of course, local government. The TCV balance sheet is around about $100 billion, and our funding task is approximately about $25 billion each year. Those numbers have significantly grown over the last few years as a result of COVID, the COVID impact on the state's finances. We are rated AA with the Standard & Poor's. So that's enough about us, and I'll just talk to the framework. So obviously the Treasury has approved TCV to become a direct lender to local councils. And I guess the main benefit from our perspective will be that you can achieve a lower cost of lower interest cost savings and be able to accept by being able to access TCV loans. Excuse me. TCV borrows from the financial markets at a wholesale rate, so lower than what a bank would do, and then we pass on those savings directly to customers. So under the framework, so what can the loans be used for? And basically the framework allows you to fund for both infrastructure and general working capital requirements. So the funds and the borrowing of funds is not limited to works of a specific nature, which may have been the case in previous programs. Like, for instance, the infrastructure loan program, where you had to have a particular purpose. So there's a lot more freedom under this program than there is under previous schemes. Sorry. Excuse me, I just can't find my mute button at the moment. So there are things that you can't borrow for though. You can't borrow money to refinancing non-maturing loans from other financial institutions. So if you have a loan from NAB and that matures in 3 years' time, you can't repay that early and then refinance under the loan framework. The second area where you can't borrow for is to invest in financial assets. So basically, we don't allow you to sort of arbitrage, I guess, borrowing from TCV and then to invest in a financial asset. But other than that, you're pretty much free to borrow for any purposes that the council determines. sorry. So under the framework, you will be required to provide security. TCV will register your security over the general rates, and they'll be registered on the PBSR. TCV will accept the order of priority in the PBSR. So if you have an existing security interest, we will rank behind that interest. In order for TCV to confirm its priority, we do require that councils will advise us if you have permitted security over the general rates to existing financiers. The other thing we require is you to seek TCV's consent to change the nominated bank account where the general rates are received, as this may impact the order of priority regarding the security interest. There are a couple of financial covenants that you're required to be met. Councils will be required to maintain compliance against these financial covenants at all times. They're very simple. There's the interest cover ratio, which must not be less than 2 to 1. And there's a level of interest-bearing loans and borrowings must not exceed 60% of own source revenue. You will be required on an annual basis to provide a compliance certificate to TCV, confirming that all undertakings have been complied with through the year. These covenants have been set by the Treasurer and DTF, and are required to be complied with at all times. We often get asked, can you borrow from other financial institutions? And yes, you can. However, if you have provided security over the general rates, you will be required to receive TCV consent. And we also advise that if you are borrowing, if you do have existing borrowings from from banks, you probably need to seek if their consent is required to borrow from TCV. Turning to the administration of the framework, the local government framework will be administered by LGV and DTF. LGV will review the final adopted budgets, which I think are due by the end of 30 June, to determine the actual planned new borrowings for each financial year. The planned new borrowings are then presented for the endorsement of the Minister for Local Government. Once that's completed, LGV will then provide this information to DTF, and DTF will then undertake the credit assessment. DTF will assess each council's financial viability, their capacity to repay the loans and service the interest costs. Their review is based on the council's published financial statements and their budget forecasts. As I mentioned before, it's based on that there will be two financial covenants required to be met, which is the interest coverage ratio and the debt to own source revenue. It's probably really important to note what the credit assessment is not. It is not an assessment of the financial sustainability of a council. It's not an assessment of how much a council should borrow or can borrow, but rather it's an assessment of the amount of funds that the council plans to borrow and whether the council meets the state's credit criteria. So I think that's a very important point, because I think we've had quite a few questions about, is the limit the amount of money that a council can borrow? It's only the amount of money that a council can borrow from TCV. So if you choose to borrow from an external financial entity, that's entirely within your control. If you meet the credit criteria, DTF will recommend to the Treasurer that council can borrow from TCV. And for those councils that don't meet the financial covenants, a council can seek a further review by DTF and have that assessed. One of the things that has come up since we forwarded the letters is that the forecast borrowing, the borrowing limits have been set with the forecast plans in mind. So but councils can only borrow what's in their adopted budget. So the same process that exists currently exists for you. So if you have a $10 million budget to borrow this year, you can only borrow up to the $10 million. But your limit may be slightly higher than that. And that's just to reflect that the planned borrowings for the next couple of years may be a little bit higher.
And sorry, Justin, can I just add to that point? What that also allows for is that when we tick over into the next financial year, it will take LGB and DTF a few months to do a new credit assessment. But if that borrowing limit is higher, that will allow you to start borrowing next year's borrowings that are in your budget as soon as the financial year takes place. So on the 1st of July, if that number is sufficiently high enough, the subsequent year's borrowings can be drawn from TCV.
Yeah. And as said, so TCV will alert you or send out the information on the borrowing limit each year. And that'll come from, I think at the moment we're expecting that by October each year, we will update the information to you. And the reason why the DTF do the credit assessment is because the Treasurer provides TCV with a guarantee on our loans to you. So if in a highly unlikely situation, one of you were to default on payment under the loan, TCV then has recourse back to the state. So if you think about it, we're kind of like the operational relationship banker for you, but the credit department is the Department of Treasury and Finance, and they take the credit risk of the loan as opposed to TCV taking the credit risk of the loan. I'll turn now to get Tanya to pick up on the TCV products and the loan pricing.
Thank you, Justin. And good morning, everyone. And thank you for this opportunity to meet with you today. As Justin mentioned, my name is Tanya Ventura, and I manage the Treasury Client Services team at TCV. The team is responsible for TCV's engagement with the local government sector and the delivery of our products and services. We have two dedicated local government relationship managers, Leah Panica and Steve Bukakis. Many of you will already know Steve in relation to the community infrastructure and sports loans TCV is currently providing to some councils. Together, we look forward to working with you regarding your Treasury requirements. Today, I'll be providing an overview regarding TCV's products and services, the pricing of TCV loans and current TCV loan interest rates, and TCV's loan agreements. So this slide has a series of dot points around our products, our loan products, and our investment products. The thing to note about TCV's loans are that they are readily available. The only thing that is required, apart from obviously having an approved borrowing limit, is the provision of a drawdown notice. So loans can be provided to you at any time that they're required. We provide variable and fixed rate loans, but the main and the term to maturity can be between 11 AM, a daily working capital account, out to 15 years, and any term in between all of those. The thing to note, and the thing that we look forward to working with you on, is that they can be tailored to your requirements. Fixed rate loan products include fixed interest only loans, so principal is drawn, interest is only serviced throughout the term of that loan, and then the principal is repaid at maturity. We have credit foncia or amortizing style loans where principal and interest is paid down during the course of the loan. And as I mentioned, we have an 11 AM facility, which really works well for your working capital requirements. But the main thing to really consider is discussing those requirements with you, and we can advise as to what would be the best structure. But the thing to note is that we pretty much can structure anything. If you can articulate the cash flow profile that you're after, we can tailor that. We also provide our clients short-term investment products. They're mainly term deposits out to 1 year. They'll be priced at a wholesale bank bill rate. Beyond a year, it'll be at the TCV yield curve. The rates will be different to the term deposit rates that banks are pricing at the moment. They will be, the bank rates will be higher than TCVs. That in part reflects their requirements for funding, but it also in part reflects the credit risk. Alternative investments are available at Victorian Funds Management Corporation, the organisation in Victoria charged with managing different asset classes and the long-term investments of the state. And their services are also available to local government in the same way that TCV services are. We also provide internet access through our TCV online website, and there you can access transaction and portfolio information. Maybe we'll go to the next slide, please, Justin. So this is about how we price our loans. So our loans are priced at the TCV yield curve, which is determined by the cost of our bond issuance, plus an 11.5 basis point TCV administration fee. The TCV loan will also incorporate a DTF guarantee fee of 15 basis points, which will be collected by TCV but paid to DTF. From a council's perspective, it'll just be an all-up lending rate. The thing to note here is that there are no other lending fees associated with our loans. There are no establishment fees, ongoing service fees, or facility fees. So for example, if you plan to use part of your borrowing limit for working capital purposes, there is no commitment fee to that. You'll draw on the 11 AM facility when and if you require to do so. Next slide, please, Justin. So this is a snapshot of our fixed rate interest rates and our term floating margins that was taken on the 31st of January. And these rates and margins include TCV's 11.5 basis point administration fee and the DTF guarantee fee, the 15 basis points. As you can see here, we have the rate on the first rate there of 40.415. That is the rate applicable to our 11 AM call account. And as I mentioned before, that is an account typically used by clients for working capital. There we also provide a series of fixed interest rates. This is for a fixed interest only, not a credit foncia rate. Credit foncia rates will vary, but just marginally different, again, depending on because the cash flow profile is different. And so what we can see here is that if you had borrowed 1 year on the 31st of January, the rate for that would have been, a total borrowing rate would have been 0.65. And that increases incrementally out to 15 years, where a rate out to 15 years is just under 3%. As you can see, the rates are really still quite low, but the thing to note is that they are expected to steadily increase as economies recover from the effects of the pandemic and in response to higher inflation. And obviously, these issues have been in the press, particularly this week with the RBA governor's speech. Just on loan interest rates, where we've got various channels where we can communicate our interest rates to local councils. We have publications that our economic publications that we email out daily, weekly, and monthly. Rates will be published there. And we're currently working with FinPro to also communicate that information via your association. In order to borrow from TCV, the first thing we need to do is sign a loan agreement, which we call a multi-option loan facility agreement. You'll affectionately also come to know that agreement to be the MOLF, that's what we call it. And we also need to complete some onboarding requirements. A copy of the MOLF and our onboarding documents can be accessed from us directly. Just give us a call and we can forward that information to you. The main requirements of the MOLF that require careful review and consideration are the undertakings regarding use of proceeds, the fact that you can only borrow what's in your annual budget, the financial covenants that Justin discussed previously, and those consent obligations around security. They're commitments and they're obligations that are ongoing and need to be well understood. There are requirements to provide financial reports each year. And in order to borrow, there are some conditions that require satisfaction prior to borrowing, and they're known as conditions precedent in the loan document. It's really important to understand these terms and conditions before you execute the agreement with TCV and before you borrow from TCV. And we certainly can assist you in clarifying those requirements and also the information that we'll need to onboard the account. Thanks, Justin. This slide just provides a series of dot points of some advisory services that we provide our clients. In the Treasury space, we can provide advice around debt and investment transactions, structuring and portfolio management. We're able to update you on movements in interest rates and events in financial markets. We're able to provide advice on Treasury policy development and review, and a number of other things. We have an economist who, as I mentioned before, produces a series of publications, daily, weekly, and monthly. When we get to chat to each of you, we will confirm whether you'd like to receive all or some of those publications. We also provide a webinar. It's a 5-10 minute webinar after each RBA meeting every month. We provide a series of client presentations for our clients. They can be individual to your executive, to your staff. And we also have 2 major presentations and a networking lunch in the city normally. An invitation has been forwarded this week to your CEOs, inviting them and the council's finance team and executives to our first client economic presentation of the year on February 18. So if that hasn't made its way to you, you might want to reach out to your CEO. This time, we were hoping to be able to deliver it in the city as we normally would, but obviously, given current circumstances, we'll be delivering that as a webinar again. So I encourage you to join that. It's really interesting. Our economist, Emma Lawson, does a great job in terms of breaking down what's happening in the economy and what the future will look like. And I hope that in August, when we're due to present again, that we will be able to meet with you in the city and have some lunch together as well. We have another team, a project advisory team, who offer a range of financing advice and services. Probably what may be of greatest interest to the local government sector is analysis of sort of various debt structures and outcomes, and more broadly, sort of financial sustainability. You know, if you take on so much debt, or if the finances will vary in a certain way, what those outcomes could look like. We recently did an exercise for one of the metropolitan local councils, and we'd certainly be happy to discuss with you that process and the outcomes, and that could be something that you might be interested in. So just to finish off, the Treasury Client Services team will be contacting all of the local councils that have been approved to borrow from TCV in the next period to begin the onboarding process and to arrange for the execution of the loan agreement. If there isn't an urgency to commence this process, please contact Steve Bakakis, Leah Panica, or myself, and we can arrange to meet with you now. I really appreciate this opportunity to meet with you today. As Justin mentioned, we're really excited to be able to service the local government sector. We've been waiting for this for a very long time. We're really looking forward to developing great relationships with local councils. We are a relationship-driven organisation. That's important to us to get to know you, and just as importantly for you to get to know us, so you can understand how we can help you. Thank you very much for your time today, and at some point Justin and I can address your questions if there are some.
Great, thank you for that, Justin and Tanya, really appreciated. There's no questions in the chat just at the moment, so we might kind of step through the other two panel members. I guess just an initial comment, you know, as the presentation reflects, there is new space for us as financial professionals to learn. There's different terminologies. You know, borrowings can either be as simple as you make it or as complex and innovative, you know, depending on your council circumstances. So certainly the areas of advisory support, etc., that you've also outlined become really important. I might throw now to Nathan to give us a bit of a spiel on where the thinking is at in Bendigo, and particularly a lot of the internal dialogue and considerations that sort of precede that step prior to engagement. Over to you, Nathan.
Thanks, Binda, and thanks, Tanya and Justin, for that run through. Yeah, we're excited too. I'm pretty excited. We might not have to do a full public tender process. I'm pretty excited about that, and some other things that I think will help. Just for where Bendigo's at, we have borrowings in our budget this year, but we have not acted on those as such yet. We've paused that to have a bit of a look, and I'll just talk a little bit. I thought it might be helpful just for a few minutes to talk about the things that we're looking at internally on the way to that, if you like, as part of that process. We are already onboarded pretty much, though. We had a SILS agreement that meant that we'd gone through a bit of this. So community infrastructure loan scheme was one of the sporting or community infrastructure ones last year or the year before. So we've done a bit of that work, and I know many other councils will have already. So you are partway through that gate if you've got some of that happening already. So we've kicked off a few things here. Reviewing borrowing policy might sound obvious, but with TCV and some other things on the cards, making sure we're just lined that up and having a bit of a think about that. But it's probably worth, we thought, a review of borrowings policy after the Minister for Local Government and the other session. I assume everybody here heard that or has been able to access the recording, but if you haven't, go back and listen to the Minister talking about the kickoff of this and the change in attitude, if you like, to borrowings there from LGV. Bendigo also sets a minimum cash balance as part of its financial reserves policy. So we've codified that, and that policy is up on the FinPro website if it's something you haven't kind of come at. We'll revisit that policy, including maybe looking really at which reserves do need to be 100% cash backed. If we've got this additional flexibility and I can draw down that quickly, do we need to have that much lazy cash sitting on the balance sheet? And then another part, I guess, that we're looking forward to is, or looking to try and improve or look at again, is just a bit more detail and time on the cash flow statement. So sometimes that can be something that just spits out of your financial statements and you're pretty focused on council submissions and other things for your budgets, but getting a bit more granular about that, particularly over the 4-year capital program, for what needs to be spent when, what's really design and what's really construct, and when procurement happens and those sorts of things. So getting to more or improved regular cash flow forecasting, which is not necessarily, I know from chatting to some other local governments, not something everybody does in a detailed way. You haven't had to. There's been a bit of cash on the balance sheet. You just look at it once a year. That's okay, but I think that's changing. And so that's one of the things we're starting to think about and look at. So that's a couple of things from us internally. In terms of a list, I sort of said, right, check borrowings policy, check your procurement policy. If you've used one of the ones that's been kicked around last year, you're okay because it's a government entity, but just make sure you're not tripping yourself up if you go to borrow and you've got a procurement policy requirement that you weren't aware of that told you had to go to market or something. We've got a reserves policy. We'll check that, as I mentioned. Have a look at your budget, or just maybe park more time on the way for this budget for your cash flow and arrangements, and maybe not just every year for that. And I think it's already been mentioned, but in my mind is education. So this is a good start as well, but EMT and councillors just need to be brought along. So if you've got an ARC coming up, stick it on the agenda. There's a bit of content here that you can possibly just make sure they're aware along the way. So there are a couple of the internal pieces, noting we're not actually borrowed yet through TCV for this process. So I'm looking forward to hearing from Chen next. We're early in that in a way, but there are a couple of things I thought from a council internal looking forward point of view we might be thinking about next, and there might be a little bit of a list there for people if you're looking for something to do that's not just the onboarding process internal to your council. Thanks, Binda. That's probably enough from Bendigo. Ta.
Thanks, Nathan. And it is that internal dialogue with councillors, with the executive, really becomes critical. And that's one of the things I know we've all been kind of looking at, because the whole move to increase borrowings is seen as increasing risk. And so, there's a whole lot of different appetites sitting around councils that become important. So Chen, I'll throw to you. I know there's one or two hands up that I can see. So I think we'll throw to you, Chen, first, because you're sort of a bit more progressed in terms of that journey of engagement, specifically around TCV loans. So maybe some key takeouts and learnings from you. Thank you.
Thanks, Binda, and good morning, everyone. So at City of Yarra, we had a 32.5 million local government funding vehicle that matured in November last year. We actually went out for tender in August, and as you all know, in September, the state government announced the TCV loan. So we terminated our tender process and we are refinancing with TCV. So the local government funding vehicle borrowing was repaid in full in November last year. At this moment, we have submitted all the loan documents and we're waiting confirmation from TCV on account setup, and we hope to settle the loan this month. I'm just going to give some brief information on the learnings I have external process, the process with TCV, and our internal process. So in terms of the process with TCV, I think really the first learning or the first advice is really to contact TCV, because my experience with them has been very, very positive. So I have been in contact with TCV since September last year, because I know we're going to want to settle as soon as possible. And I've been mainly dealing with Steve and Nania, and they have both been very responsive, very helpful. They always respond to emails, set up meetings. I have had many, many questions. So that's really my first advice, is that when Tanya said they are a relationship-driven entity, I definitely felt it. So they are very friendly. It's their go-to. And then the next thing that I learned is really the loan agreement versus drawdown notice. We all know that you set the loan agreement first and then you give them a drawdown notice when you're ready. But the difference is that the loan agreement here covers the full range of facilities that TCV provides, which Tanya just introduced, and there's a full range of products they provide, which is a bit surprising to me. It provides the flexibility that we never had. So, 11 a.m. loan or flex rate, term or flex rate, fixed rate or variable rate, or even loan amount. You don't have to decide when you set the loan agreement. So there's a large range of flexibility there you need to think about. So really, you don't need to decide on the details when you sign the loan agreement. So if you know you're going to borrow, my advice is to start the process before you know all the details of your borrowing requirements. So that's my experience with TCV, the process. And then in terms of the internal process, I think Nathan has mentioned a lot of things that needs to be done. I guess the most obvious one, as Nathan mentioned, is you really need to agree on the financial principles with the councillors, which hopefully we have gone through most of them as part of the long-term financial plan. For example, borrowing, borrowing policy, whether it's just for working capital, which allows you to use 11A norm, or you do really want to borrow for intergeneration capital projects. And the biggest topic for us is reserve. So at Yara, we have a significant amount of reserve. So is the reserve fully cashed up or not? So we just updated our reserve policy, and our reserve will continue to be fully cashed up in this new policy. But this is a hot topic, as just Binda mentioned before. So your council might have a different view, and you might have a different conversation. So that's a discussion you probably want to have before you draw down your loan. And also, administrative side is you need to figure out the council resolution. So you need to plan ahead about what exactly you want to involve the councils in, whether you want them to be involved in the discussion on fixed versus variable, or the term of the loan. So, or you are just happy to follow whatever you have in the budget or long-term financial plan. So that's just really the early planning in terms of setting up the loan. And the last learning is really don't do this while you're doing a budget, because it's really not enough time in the day for everything. But yeah, that's pretty much all my experience, Binda. Thank you. Very positive with TCV. Emphasize again. Back to you,
Great.
Binda.
Thank you, Chen. That was really good. Tanya, I see your hand up. Was that a point of clarification before I open up to questions?
Sorry, Binda, if I could just quickly just add to those comments from Chen and Nathan. First of all, Chen, thank you for those kind words, and Ross, I saw your message as well. That's really appreciated. Just the two, I think I was remiss in when talking about the loan agreement, and Chen highlighted this. It is it's a one-off agreement, it's evergreen, and it does have that flexibility. So I was remiss in highlighting that. So thank you, Chen, for raising that. And Nathan, when you talked about the necessary cash reserves, that's music to my ears. Now that's a decision, obviously, for the councils. That's not something that I get to be involved in. But the one thing I wanted to highlight is that TCV does provide that liquidity. So and I appreciate that in councils it is necessary to reserve some cash, but I wonder if it's necessary to reserve all the cash. And given now that you have this access to liquidity, then I would suggest that it's probably not. But what I wanted to mention is that the thing to factor in when you do prepare your budgets for next year and budgeted borrowings for next year, if you plan to use TCV for that liquidity and pay down some of those cash reserves, then to provide for that in your budgeted number. So that was the only, but again, can talk to everybody individually about those sorts of matters. Thanks, Binda.
Thank you for that, Tanya. Nothing has come through the chat yet. Ross, thank you for your comment, which I think Tanya acknowledged. Malcolm Lewis, I see you've got your hand up. Did you want to ask your question?
Yes, thanks. Just a question in relation to TCV's current position in the latest advice of the RBA. As we know, there's been a lot of, I guess, media communication. I think even the RBA have come out as recently as this morning and talk about the possibility of interest rates increasing later this calendar year. Just interested in the TCV's current view on that. I'd see the, for example, the fixed interest rate for 15 years is still sub 3%, which is very attractive. So interested in just what their forward thinking might be at this stage. Thank you.
Yes, thank you. So Emma Lawson, our economist, released updated forecasts yesterday, and if you like, I'll forward these to you. So the basis of our view is that interest rates are going to move higher over the next period ahead. At the moment, we're thinking the first cash rate movement will be in the second quarter. So it's probably earlier than most banks have got at the moment. I think most people have brought their the first increase in interest rates into this year. So we think they'll move from 10 points now, where the current cash rate is 225 in over the next in the second quarter, and then they'll progressively move over the next year. I think at the end of it, we think the cash rate will ultimately get to around about 2.5%. So we think a lot of that movement in interest rates will be greater in the front end of the yield curve, sort of out to 3 years, 5 years, and the back end of the curve won't move as much. But we've definitely believe that we've entered the new phase of the cycle, and so the interest rates that you would have seen late last year were basically the low. And so what I'll do is I'll for those that don't attend our economic webinar on the 18th of Feb, I think it is 10. Emma will then talk more about the story behind that, but then I can send you what our current forecasts are as well.
Thank you very much.
Thank you. We do have one question that's come through in the chat. So just in terms of the covenants, the things just disappeared, hang on. In regards to the covenants and these being maintained at all times, does this relate only to adopted budget or to the long-term financial plan?
The adopted budget. So I do know that Vago said in a previous conference that you had that these are not limits or anything like that, they're just guidelines. So what DTF are doing is just they use those guidelines to understand the credit risk that they're taking on. And I think, so what they do is they're just looking at the adopted budgets because that is what your plans are. So I think it's very important going forward to ensure that your adopted budgets have the correct information in there. So I've noted that some councils have a higher borrowing requirement in their budgets, which they don't actually plan to undertake. So the only information that DTF can assess the credit capacity on is based on what is in your plan. So it's probably important to make sure your plans are accurate.
Okay, I guess a follow-on question from that was really around the metrics and measures and really the different different definitions that TCV, DTF, VARGO may use. So there may be something that the DTF think is appropriate, but it throws out in terms of the VARGO metrics into red or whatever.
Yep.
Is there sort of engagement across the departments in trying to align sort of some of those methodologies? I'm
not 100% sure between DTF and VARGO, but I will say that if a council ends up on the wrong side of the ledger with those ratios, you can engage directly with DTF and then provide sort of further information. So they kind of do a desktop, what I call a desktop credit review, and it's sort of like a pass or fail. But if it's a fail, it doesn't mean it's a no. It just means we need further information and engagement with DTF. And DTF are open to having that engagement with the sector.
Great, thank you. Look, I'm not seeing any other questions come through. I will just and that's okay, because this is all, a lot of it's kind of new material and probably need to sort of take it in. Certainly any follow-up questions that you may think of, please feel free to reach out to FinPro, and we're happy to liaise with TCV in that regard. Or if there's anything that's very specific to your council, I think both Justin and Tanya's kind of, put the offer out there to engage. So please take that opportunity. I guess also in the interest of time, I'll just do one last call out if anyone's got any questions that rush to mind.
Binda, I think someone did ask in the past about the time frame for
timing,
the process,
yeah.
how long it takes.
Yeah.
Yeah. As mentioned, the loan agreement, you can contact TCV straight away, and we can give you the loan agreement now. But it probably does take a couple of weeks for you to understand the loan agreement. So rather than just sort of signing it and sending it back, actually, I think it's worth ensuring that councils understand what the requirements are in the loan agreement, and then we can help you there and provide guidance to the loan agreement, etc. So I think in our experience, that's sort of taken a couple of weeks, and it's really reflective of how quickly you can review it and come back to us. In terms of the onboarding process, we can sort of speed that process up, but we think it probably takes a week to do that, to normally onboard a client. But if required, we can speed that up. So I think you probably want to allow a few weeks to get the loan agreement up and going and get in the onboarding. And as Tanya mentioned earlier, the loan agreement and the onboarding process is a once-off. You don't have to do it again. And then when you want to draw down on the loan, you have to provide a drawdown notice. And that's just stipulating the terms of the loan that you would like. And then we will endeavour to, or we will transact that deal within 2 days.
Great, thank you for that. Look, I'd like to, I do have some administrative stuff, FinPro wise, but before I do that, just formally thank Justin and Tanya for joining us today. That's been really good, and I think thank you for reaching out to FinPro in this regard as well, and hopefully we'll kind of build strong relationships as we all move forward on that. Nathan and Chen, thank you very much for your insights as well, and I'm sure you're both, and I will speak on your behalf, that you're both happy to take calls and questions if anybody does want to reach out on to tap into your experiences in that regard. And obviously, through Gab, please feel free to approach FinPro, and we'll try and consolidate as much of the information content as we can for you. So thank you on behalf of FinPro for your time today. Just in terms of some administrative announcements, and really wanted to give you just a sense of what's coming up for the year in terms of the PD program. So the next seminar is planned for the 24th of February, and that will provide a bit of an economic outlook and something that we all kind of hold our breaths for, and that's the launch of the model budget. So a key one for all of us on the 24th. There's a tentative kind of date around the 10th of March to have a conversation and a discussion around community engagement. We all did an extensive part of that as part of our 10-year plan, but what are some of the ways that we keep that going in a meaningful way with our communities. April, we'll intending to really focus on gender equity and specifically the links on, you know, the so what for finance or financial policy development, because we want to make sure that, you know, we kind of broaden our reach and understanding across that. And, you know, as the year progresses, hopefully, fingers crossed, we are hoping to have live events. And Friday, the 3rd of June, I think Gab's kind of already booked the convention centre, and we're hoping that we can get sort of our day PD session happening there. And that'll be on the back really of the LG Pro. I think they've got their session happening around that time as well. So they're the things that are coming up. On behalf of kind of the committee, I know everyone's really energised and looking forward to engaging. You know, we've discovered new ways of engaging, and there's obviously new challenges for the sector as well. So Bradley, any final sort of comments that you wanted to make as our president? Just sort of give you the opportunity. Otherwise, happy to sort of close the meeting. No, all good. Okay. That's all right. Okay, so
back to DLT. Yeah.
So, okay, well, thank you very much, and enjoy the rest of your day, your week. Thanks all.
Thanks.